Hello, mic test. Let's see if we are live. Yep. Hello, Martin. Is the audio clear enough? I'm hearing some sort of disturbance at my end. Is the audio clear enough? Martin, you can tell me if the audio is clear enough. Well, in that case, let's begin with the very quick introduction, guys, and we will go forward with the introduction and then the actual webinar content. So let me give you a rundown of what I do and what's this all about. So, guys, my name is Nirav. I'm the admin owner of 50i's market analysis website as well as YouTube channel, where we do this series of trading opportunities webinar every Friday at 2 p.m. GMT, 7:30 p.m. IST. Just convert it to whichever time zone you are in. So currently we are conducting this. One second. This one, which is 111th iteration of the trading opportunities webinar. This is being broadcasted live on my YouTube as well as LinkedIn page. And the way we proceed with these webinars is first we go over and look at charts of the instruments which we have discussed in the last time, see what we said, and then we go forward with the current situation at hand, right? So before proceeding with all that, let me give you a quick rundown of the other things which I've been doing other than this webinar. And yeah, by the way, we have captured so far, including this 110th webinar, 259 trades, all discussed in live webinar, and 4 of these were discussed in the 110th webinar. We will check all these 4 today, of course, in the 111th edition, and these 259 trades captured in 110 of these webinars, right? So apart from these webinars, as I said, I have a very successful course on Elliott Wave, which is the concept which I use, or the trading methodology which I use for my own analysis as well as live trading. And the course is called The Complete Guide to Professional Trading. It has 1600 plus students, and you can check out here by visiting 50is.com and then checking out the link in the middle, Elliott Wave course, right? Apart from that, I'm also the author of the book Think with the Markets: Secrets to Achieve 80% plus accuracy using Elliott Wave, available on Amazon via the Kindle platform. You can again check out the links for that here on 50is.com/think with the markets, or just visit the Amazon app at your end, right? And lastly, I have been keeping a track record of all the analysis which I have published over the years. Since 2016, we have had an accuracy of 80% plus. As you can see, all these track sheets, you can just scroll in them, check the instruments we were discussing, what were what was being said, and the link and everything. And this is beating all industry standards, where even accuracy of 60% plus is considered high. I have a track record of 80% plus for 6 consecutive years, going as high as 90 plus. Right, that's about for the forecast accuracy till 2021. We have these spreadsheets. After that, we have these trading opportunities webinars, for which I already told you we have captured 259 trades in the last 110. And we need to update that, of course. Yeah, that's about it for the very quick rundown or the quick introduction. And last thing, this is how we'll proceed. We'll proceed with the chart of euro, followed by crude, gold, S&P, Nifty, and in the end we'll discuss Bitcoin. And we will always look at the chart discussed in the last webinar and then see what happened in the current one. So with that being said, let's now head over to our actual charts, and let me just quickly load up euro chart before we head over and discuss all the things formally. Where is euro? There it is. So guys, now let's begin our webinar officially, and currently we will be discussing or starting our discussions as usually with our chart of Euro USD, right? So here on screen we have the chart, and even before looking at it, let's very quickly run down the actual recording which we had for this. So here is the recording from the last webinar, 110th webinar. And here's what we discussed in that webinar. 1 second. So our discussion in the last webinar was basically that I am around 11:34 mark. If you want to check it, you can check the whole discussion starts around 6 something and goes till 12. So the main idea was that either we were seeing a completion of a correction like a zigzag here, this one, or the second idea was that this was just a triangle. Let me change the color here. So this was just a triangle, and once it's complete, the market will just fall down. So these were the two analyses, and as I just said, you can check the whole thing in detail here. I'm just giving you a rough idea. And the conclusion of these analysis was that minor downside movement is expected on this counter, and after that it can either go up or it can go straight down. And I believe I had some shorts on this counter at the time we were doing the discussion, right? Again, we can check all of that in the last webinar. You can check all of that in the last webinar at your end. Now let's head over to the actual chart and see what happened. So this was the point of discussion, 12th April, and the timing was around somewhere here. As you can see, the market has given a minor down leg as per our discussion. And after that, I am also out of this market because I have no idea if it will go straight up or if it will go down. Right. So the situation with euro to conclude is that while our last analysis has played out as per our discussion, here at this point in time we do not have any very clear idea what is this market doing. It can do one of those two things. I'll just conclude it very quickly for those of you who have not attended the past webinars. Again, I highly advise that you attend these webinars on a regular basis so that you are able to grasp what I'm really talking about. But just to give a small conclusion here, what we have is at this point of reference we have a wave A, let's say, and this is one of the analysis that wave B is heading upwards with the first leg up, correction down, and then another leg up, right? There's one of the two analysis. This is suggesting upward movement, and second one is that we have a possible triangle here. B is already complete here as a triangle. And this can then head lower. Now both are equally likely, and this is literally the same as the last webinar. Now my setup is basically look for shorts below 1.0610, and we can have some scalp longs as well above this high as well. But the short side setup is much more clear as the downside is big if it happens to play out. Otherwise, as I said, both sides are likely, and we are just waiting for a breakout trading opportunity kind of situation here. So wait and watch for now. Nothing much to add here, and let me just go through the comments. Hello, Martin, and he confirmed everything was working. Thank you for that, Martin, and hi, Sandeepan. So yes, that was that for our discussion on euro. Let's now head over to our next analysis. What's that? Getting smashed on euro. Okay, probably he's just telling about his position. So I guess as I said in the what do you call rules and guidelines, don't just post your current running trades here. Just keep that in mind. So let's now head over to our next chart, which is the chart of what is this crude oil. And of course, let's just very quickly head over and check what was being said in the last webinar. Now, I know this one did not play out, but we do a track of these things by checking for the record. So let's do that. So here's what we were expecting, 16 something here, somewhere here maybe. Yes. So this was the expected progression. We were expecting upward movement, and we were assuming that this is the box range or the sideways market movement continuing for some sort of wave 4, and the correction once complete will lead to an upward movement. None of that really happened. What happened? Let's head over to the live chart and see. Is that? So here's the live chart here, and let's see what really happened. I have two updated scenarios here, and what we have here is Martin is saying like confidence in the market, but this webinar guide my analysis during the week. That's awesome to know, and thanks for letting us know that, Martin. So going forward with this analysis, what we do have here is the updated analysis suggests that two possibilities exist from this point of reference, which is this uh, price level 67.86 is right, and my primary analysis at that point is this point is I think that's the one. Let's just check it again. Yep, that's the one. Now this one suggests that this is heading over as a diagonal structure, right? Again, this is one of the two analyses. I'll discuss the second one, of course. Just wait for a bit. Now, if this analysis is correct, then what we expect here is that the market will first go lower, at least go and into the price territory of this part. So we can just say lower than this alert, 81 point, let's just say 81. So if this analysis is correct, we expect market to go touch 81, maybe go a little bit lower, like a minor dip. And then the market will reverse and take out the high. That's our first take. Let's call this H1. First lower and then upwards, right? And the second analysis is over here. So this is our second chart. Very straightforward analysis, basically suggesting that what we have over here from this point of reference is nothing but a corrective structure in the other direction. W, X, Y, and then it's just going to go down, right? So the second analysis is suggesting clear downward movement. Let's denote it with the yellow color, right? H1 was suggesting minor down move followed by upward movement, right? So we have kind of counter views, and there is no real clarification which count is going on at this point in time. And you already know what's the situation. We have some strong political and other factors at play, the war situation and all that. So it will remain or is expected to remain a volatile market, and the uncertainty is supposed to remain. I don't think it will follow the counts like it generally does in volatile situations. You will see extreme scenarios. Extreme scenario means those who have bookish knowledge or general knowledge will not be able to see what's going on really. So it's kind of expert level market, I would say, for lack of better words here, right? But yeah, these are the two main themes which we expect. Generally, we will like to see downward movement, retest of the trend line, and then sell. But as I said, as the volatility increases, you will see more and more of extreme things happening and things which we do not generally see. So stay ready for surprises, I should say. So that's about it for our two hypotheses, right? And the simple one to play will be that this diagonal thing plays out, and if it does play out, we will of course know it at the break of the 87.38, but that's too ahead in the future. We don't have any way of knowing that right now. So that's about it. Nothing much to add on CL. We'll now head over to our next chart of gold. And by the way, guys, if you have any doubts or questions, you can just post them in the comment section of the live chat, and if not, I'll just move ahead. So here is the recording from our last webinar on gold. Or is it? One second. Yeah, here it is. And 110th webinar, we were discussing gold. I had long positions there. Let me just go and navigate to the analysis. Potential parts of this up move, some part here, some part there, some part here. I showed you guys the trades, right? All of them were shared in this webinar. Again, you know, guys, you should check the whole thing. This is a very extensive discussion from 17 to 30. That's a lengthy discussion. I'm just showing you the highlight for record keeping purposes. Okay. So what we were discussing was, let me, yeah, that was the main. Yes, we drew the possible retracements. So yes, guys, this was the main theme here. We were expecting some pullback on this counter, and then a continuation of the upward movement. And at that time, I had some longs which I had have been holding since, I think, I don't know, I had been holding them for quite some time. My trail was hit after the webinar, and I exited everything in profits. That was very decent profit. I recall that much. And the pullback levels, let's see if we have marked them properly. So this 2395 and the other one is 2380. Now let's go and check the actual webinar. So the conclusion of the last discussion was expecting pullback and then up move. And here's the current chart of crude oil and 2326. Okay, I got it. So after the webinar, I think we had a spike after our discussion. So the retracement levels had to be redrawn. But anyway, it has hit our minimum retracement level 23.6 at 2327. So it has so far performed as per our expectation. And Martin is saying can't wait for gold analysis is very hard. Yes, gold is now into a sideways range, and it has, I think, 3 4 some counts. I'm going to only discuss the two major ones. So let's discuss that. So what we are expecting here is, as we discussed in the last webinar, we were somewhere here. We were expecting that some pullback is expected for wave 4, and the updated 23.6 is at 2327, which it has touched. However, we are not sure if the correction is complete. If it's continuing, it can go and check the 2261 level as well. We'll just mark the lines and go ahead with our analysis to reduce the clutter. Right. Now, here are two things which are possible if the wave 4 is going to go as a flat. It can do something like this, give a 4 here, give a false break here, and then head up. Right. So that's the minimum expectation from a bullish movement. However, that's all well and rosy because I currently do have a gold long with the stop loss at 2362. Right. However, that's that's a scenario which is helpful for our bullish outlook. Now, why did I discuss this as our H1 or the main theme? Because the trend has remained bullish, right? And in a bullish trend, we look for bullish hypothesis as our main theme in general, unless you have a very clear sign of reversal or something. Now, with that being said, now let's look at the second possibility. The second possibility is very clear. I mean, just complex or flat or whatever this market is doing, it will go and take out this low and possibly even try and test the lower level, right? So that's about it for the secondary hypothesis. I think it is very low probability at this point for this market to go into 261 level being tested. Why? Because of the strong bull trend. Of course, if I am wrong, my stop loss are here at 2361, right? And with that being said, I think the main theme is being covered. If I am I mean, I can only talk about myself. I don't know about your position. So since I'm long, I'll just hold it. And if it goes up, keep trailing it. Basis of this, let me change the color here. Basis of this analysis, it can actually also go straight up as well, right? And if we are wrong here, then we have the stop loss, and actually we'll consider possible shorts, scalp shorts around 2340 or lower levels, right? That's about that for gold. And we remain bullish from a swing perspective, right? Unless proven otherwise by the markets, right? So that's about it for our gold analysis. If you guys have any doubts or questions, you can just post them in the comment section. And by the way, these were all the updates on gold trades and whatever we were doing, we were posting here. We look for scalp longs about 2390 and they added, I have misspelled it as shorts. We added longs with stop loss 2340, and now the trail has moved to 2358. Right. So everything we do is all posted in our Slack. Of course, you know that the text is scrolling at the bottom. If you're interested, you can check the links and request the details. Here's the point of reference on gold. Where's the point of reference on gold? Dinch, I would suggest you check the last webinar. I'll just quickly check if I can see that for, yeah, there it is. we are currently observing discount from 1985 level, right? However, as I said, I'll suggest you check the last 2 3 webinars for a better, clearer understanding of it, because we have discussed all these things in way more detail there. Truncated, I'm not taking any what do you call requests. We will discuss BTC though later on, Vishnu. Hello, Sheel, how are you doing? As I said, Vishnu, no requests. We don't take any requests here right now, at least. If anything changes, of course, I'll let you guys know. And there's a question from Martin. At this point, I need to just should said me ton. Well, Martin, come there with the intention of learning, and you are most welcome. What is this? Okay, so yes, nothing to add here on gold. Let's now head over to our next chart, which will be the chart of S&P's 500. So let's first of all load our last webinar recording and see what was being said on this chart. Here we have it on screen, and let's see what was being discussed on S&P somewhere over here. Yep. So this was our main count on S&P, right? And as you know already, this actually did play out literally precisely as per our own analysis. Right, we were expecting downward movement, the WXY correction, and the market did go down for Y. And actually, later on in the Slack post, we have been able to capture further downward movement on this counter. 1 second. These are the last few posts. Shorted 18th book profit on shorts, and the expectation was that it will go further down for Z. These are the targets. I can't see the price level for these, but somewhere above 98, 90s level, maybe 98, 49.90. Sorry, I'm saying 49.90 levels were the targets, right? So this was all posted, and we were able to capture the wave Z down, which we will now see on the live chart. Yeah, so this was what the targets were, all smashed, of course. This was the minimum expectation of minimum bearish case expectation 49.92, smashed by a substantial level, and it fulfilled our requirement for the wave Z by giving a leg down. So far S&P has moved precisely as per our webinars count, and of course I updated everything in Slack later on, and we were expecting further down move, which has also materialized. Right. So with that being said, 1 second here. So yeah, that's perfect. Yeah, so that's perfect. So what we were discussing here, just to conclude, was we were thinking of WXY. This much is discussed in the last webinar here. Somewhere here we were expecting downward movement. Furthermore, when this downward movement did materialize, I realized that it can possibly continue further, and we projected a triple zigzag. Now, what is a triple zigzag? A triple zigzag is a continuation of the corrective structure. So here's a comment from the shield. Just want to add that in Slack group member, and amazing how you predict S&P before it actually. Just thank you, Sushil, for adding that for our general audience. Right. So yes, coming back to our discussion, what I'm saying is that previously we had discussed this. We were over here when we discussed it. That is coming back to the actual chart. We were over here. So we discussed this down leg. We predicted this down leg. I'll change the color here. In yellow, right? This down leg was predicted. We actually had the targets as well, so why not? Right. Now, afterwards, what happened is we realized that further continuation is expected. So WXY is followed by an X and then a Z. So that means X, this one, and then a Z, this one. So with that being said, it has completed all the requirements, targets are hit. And at this point, we are in a situation where all our analysis have worked out from last webinar, and I think last to last webinar, maybe. I don't recall what I said there. right? So with that being said, what's the situation now? What's really happening here? Yeah, that's good to hear. So what we are really expecting here at this point is that since the minimum is done, some pullback can be seen, right? So if the WXYXZ is complete here, then there should theoretically be no further downside and the market should give a pullback. Now, here's the thing you need to recall: in a strong bearish market, if the trend is completely reversed, the counts will suddenly change and become impulsive to the downside. Now, I don't have time or the interest to discuss in detail what I'm really saying here. But what you should understand is that while the minimum downside as WXYXZ is complete, if the market does break this low of whatever this is, 49.30 something something, then of course that means our count needs to be updated. And this time, if the counts get updated, there is a likely possibility that we will be counting all of this as an impulse down. I mean, not a clear impulse down from the top to the bottom, but a series of impulse ones and twos and threes and fours. So that would possibly mean that further smashing downward movement may be seen. So long story short, what I'm really basically trying to say here is that even though our minimum downside targets are hit, we are not out of the possibility of further fall. And if further fall does happen, the whole count will change and we will see a substantial downward movement. This is currently at what you call already 6.7%. So substantial would mean 10 or higher, maybe, right? So how will we know that? Of course, we'll only know that if the market takes out the low. I think we have discussed some various scenarios on some other chart of S&P. Let me see if I can load that up and see or show you guys what we mean. Yes, there we have it. So there it is. So if you are not following what I'm saying clearly, wave Z is already complete. What I'm saying is that if the low is broken, then that means the count needs to be updated. That's what we are discussing. You'll need to probably watch this part again in the recording. So what we do have here is, I'm not going to go too much into details. We just want to check the further downward levels. We have next one coming at 4840, right? So what that means is if this low is broken, then it opens the market to possible downside to 4840, right? Of course, if it is no low is not broken, then sideways and then up or something like that, right? So stay cautious. I will not be adding any longs on S&P from a swing perspective. Perhaps maybe short-term perspective is another thing. But whatever you do, keep it with stop losses. Keep in mind the situations are getting extremely volatile. And I don't know about you guys, but I've seen these wars in live markets. Like I'm taking a trade and a bomb is dropped here or there. It's a rare thing, but it has happened in front of my eyes. And crude oil just gave such a substantial move that stop losses were not respected at all. I made 3, 4 times of the loss that I was expecting. This has happened to me personally. So in these situations, even your losses will not work. Or stop losses will not work. So keep that in mind. And your margin calls may activate because you have lost so much of the money that even your available capital in the bankroll cannot control it. So again, these things can only be truly experienced when you have experienced them. When I'm saying it, you may be taking it lightly, but these volatile situations can take away a lot more than what you what you were planning to give to the market in case of being wrong. Stay cautious. End of story here. And next we'll discuss the chart of Nifty being followed by the chart of Bitcoin, right? And if there's any question left here, you can just okay, yes, okay, didn't. What else is there? Well, not really. We did knew that the fall was coming on S&P, and similarly, we knew that Nifty was also extremely bearish. It so happened that the war came in between, and it just sped everything up. So that's the okay. Sushil is saying you predicted the fall in indices before itself. Yeah, so that's what I was getting at. Uh, Elliott Wave analysis was predicting the fall, but as I was saying that the war came in and it sped everything up, right? So that's the power of analysis. You don't have to know what's going, and practically speaking, you can't really know what's going on in these geopolitical affairs at these levels, right? So only thing we can do is predict the markets, do our own analysis, and the smart money will move, right? And its movement will predict the expected future. Spectre of the US debt, yeah, don't want to go there, guys. Maybe it is, maybe it isn't. I'm not an expert of that. My job is to predict the markets based on my own analysis and my own research. So yes, now let's move over to our next few charts, which are the charts of Nifty followed by Bitcoin, which seems to be having some interesting movements, and Nifty, which actually had an exceptional big fall, which we were able to actually catch in live market in our trades as well in Slack. Right. Before I move forward, guys, of course, do not forget to hit the like button. And we are still not seeing the level of participation which was expected from you guys time to time. So kindly make sure to share the content with 4 or 5 of your contacts so that we have more and more views. I don't know how many people even do it. There is the chart of Nifty. What did we discuss in the last webinar? Let's just quickly head over and check that. 3111 last webinar. Let's see. Where's that? Yeah, there is the recording from the last webinar. Somewhere here. Yeah. So never I outright mentioned about the big sharp move, but I did very clearly mention that it is showing signs of weakness, extreme weakness actually, and a reversal is expected around somewhere here around 4130 something. I said that I'm expecting a reversal here, even though the signs of weakness are not seen on every sectoral index or the in what you call internals of the market or broad market analysis or whatever, right? So this was not based on Elliott Wave. Actually, this was based on my own private research, which of course I will not share here. We were actually able to pinpoint it even in the live classes, personal classes, which I do. Sushil was in that batch, and we did actually pinpoint this reversal point, and we discussed the details. And afterwards, whatever this fall, we have taken substantial short positions and booked profits from them, and not small profits, substantial profits. We'll show some of the trades here, but as I said, I'm not going to discuss the reasoning. It goes outside of the scope of these free public webinars. What is there? You can guide on what participation you may need from us. It's easier that way. I'm not sure what's the question there. Oh yeah, if you are asking what sort of comments, you can ask questions based on the technical analysis which I discuss, but I don't take questions on your analysis because it's not a class. Neither do we take what you call macro analysis here because we don't do macro analysis at all. We are purely technical traders, right? But yeah, of course, you may be an expert on that and you may be using it successfully. Who knows? But we don't take questions or comments on these kind of things. Only on what I discuss. Basically, I don't want to go outside the scope of my analysis because I trade the thing. I trade in real money with that, and I don't want my views to be, what would be the right word, influenced by anyone else's analysis. I don't check anyone else's analysis, by the way. I don't follow any other guy on YouTube who's doing analysis of this sort or at all. Right. So yeah, that being said, and that was a good question. I think that's the kind of thing which does need clarification. I have put something in the guidelines of the comments. If you go to the live stream and start typing in something, I think YouTube pops up a guideline which does say the same thing, but I don't know how it works. Maybe it shows it to some people, maybe not. And here's another comment from Dinch saying, watching from Australia, best lead analysis out there. We are a small group interested in your content. Well, that's good to know. Dinch, you can always reach to me via the contact us page. I think the link is flowing in the bottom of the video as well. So you can just contact me privately. So yes, what I was saying was Nifty. I did say as much as I could in public webinar. As I'm saying 4130, do check the whole thing. I did say very clearly that I'm seeing signs of weakness. Oh, actually, I did write it here. As you can see here, Nifty bracket showing signs of weakness. But that's about all I can say in a public webinar, right? Now let's just quickly look at what kind of short trades we were able to capture before we go into the actual chart discussion. Down analysis, profits on shorts at once. Yeah, this leg down I captured, and further leg down I captured. These were scalp trades. I'm not sure if I have posted further. Shorts closed in profit April 15th. So webinar was on April 12th. You know what? There's a lot of scalps posted here, 15 seconds charts, etc., and 1 minute charts. So rather, I'll just go to the actual chart. I don't think you guys will get the context of these things. So I'll just show you on the actual chart. So first of all, I was able to capture this one. Entered shorts before the market closing and booked the profits. It literally gave almost 100% profit. I think it was 95% profits at the gap down. So predicted this leg and actually took it overnight position. Generally, I try to avoid these, but I was so sure here. I took this one. And then later on trades were on very shorter time frame. I'm not sure. Yes. Then I traded this leg down. Sorry, not till the gap, before the gap. This leg down I traded as well. Right. So these were the two main positions here and here. Yes, of course, apart from that, we traded here, there, and other things. But this was almost 95% profit. And this one also gave around 80+% profits. Right. So that was the stuff, right? It was all posted in the Slack with detailed analysis. Now coming back to our chart, what is really happening here? What we have over here is, again, it had a lot of analysis. I had deleted it because we are coming to the public webinar. Now, the two main things which are happening here is, first of all, we seem to be having a corrective ABC from here. So minimum downside expectation, or what you call the free money. Weird wordings here. The proper wording is that the money which we could have made easily, right? It has already been made. If you were in it, that's good. If you were not in it, then it's hard now. Because from this point, we have completed the A, B, and C. So that means from here, the market can go and give another A, B, and C. Who knows if the new uptrend is established or the market wants to go sideways and then do who knows what, right? So the simple money was here. It's those opportunities are gone. Now everything becomes a little bit, not a little bit, quite a bit more risky, right? So now let's see what we can do about it, what our analysis is telling us. And there are a few important things which I want to point out, which are quite important actually. So first of all, we'll look at this trend line. I'll just remove everything and draw it from here. So again, just check the last 2-3 analysis. I've discussed all this in much detail there, I think. But to summarize it, we have this trend line here. And this is our the lead count, main count, hypothesis one, whatever you'll call it. This is suggesting that if the 5 is complete here, which does seem to be the case, then a correction is expected, which has gone and broken below the trend line, right? Now, these corrections have the ability to take the market much, much lower, right? Much lower means we will check the targets, of course. It has already done the bare minimum target. I think it was somewhere here. We'll check that, of course. Now, the issue is that those not familiar with the lead wave, I'll just point that out, that whenever a 5-wave impulse is complete, which is wave 1 up, 2 down, 3 up, 4 down, and 5 up, we want to see a correction in 3 waves, right? Correction can be deep. It may not be deep. It may be just a small correction. But if it is deep, then it can go to 50-60% of this whole move. That is, if we measure this leg and draw a 50-60%, which is coming over somewhere in the middle, like here, 20,500 for our actual chart, that is as deep as this market can go, and in some rare cases to 99%, 99.9% as well. So that's the issue which I was pointing out, that the easy part is over. So because the minimum downside is there, it has broken the trend line. That's the minimum we expect. Go below the trend line and trade below it, which it has done already, right? So now let's look at the targets. So the further targets are, so first one is 21944, which is already hit. And the upcoming ones are, as you can see here, at 21390. And the last one is 20500, let's call it. Right. Now we look at the chart and we see that 21944 will be somewhere here. Right. It's literally at this gap. So there are some other technical points which will arise if we go in too much detail, but then again, I don't want to disclose too much here in public webinars. So with that being said, what we expect is, even if the market is going to 21390, we expect some sort of correction here, maybe a retest of the trend line. Who knows? If we get that, that will be an exceptionally good, setup, right? If the market tests this trend line, then again opens a possibility of further downward movement. Who knows? Maybe we can take it to 21390, right? That's the hypothesis two, let's say, the bearish scenario. Now, this is the issue. We can see a pullback. The pullback can take some time, and it can even go deeper, like test the trend line multiple times. And that's where the problem arises. If it tests it 2 times, then short entry here will lead to stop loss hit, because then the market will go again and then fall. So stay cautious here. Short term wise, I'll just go and see what we can say. Short term perspective on this chart. What we do have here is short term wise is a possible correction incoming. I will be interested in shorts, but I will first wait for the market to go below 21918 and then consider shorting opportunities on this counter. Right. Other than that, what I'll point out is this is the market where you want to go stock specific place. We have already captured some interesting movements, specifically in Airtel, where we were able to point out the upward movement much beforehand. I think this was pointed out sometime before somewhere, and Tech Mahindra also we were following. So yes, this was the count on Airtel. Again, we don't discuss stocks, but we were able to capture this leg up, the break around 1240 in live market. And as you can see, went up as per analysis. It did hit our targets, and we are still counting. Again, stock specific market. This is just one example. There are other plays which we are interested in at this point. So that's about it for our Nifty. Stay cautious, both sides, and look for something specific to sector and stocks. Not much to add here. We will now, from this point on, move over to our last one chart, Bitcoin, which is actually quite interesting at this point. Good morning to you, Luis. Where is Bitcoin now? Let's head over to the chart. Crypto total, there it is. Now, there is not much which I discussed on Bitcoin in the last webinar. Basically, we did not discuss anything substantial, but just to show you guys on record, here is the last recording, and let's head over to the Bitcoin part. Here is the Bitcoin chart. And what we did discuss was that we will look for longs above whatever this is, right? So at this level, we were looking to take breakout longs, and I did discuss some targets. Let me see if I can play it. It may give us something more substantial. So yeah, it never triggered. The market never went higher than yeah. That was the setup we were looking for. The market never went higher than our trigger line, which is which was at that time placed at 70 to 640, right? So what it eventually did is what we are seeing here. It actually did, instead of breaking that high. It's interestingly, it never actually even touched the high, right? So we were saved from a false trade there. What it did was it has given a downside impulsive decline, right? So that basically means that this market has given, let me squeeze the chart. One second, there is a 1 and in A, B, and C, I think A up and then B down and then C. So there are actually 2 points of reference we can take here. If you take it here, it becomes a simple A, B, and C matter. You can, by the way, take it here as well, I think. I will have to check that again. But what is this really? This is a flat correction, 3, 3, 5. I'm not discussing the complex hypo. I think most people will probably not understand it, so I'm just leaving it. What we have here is a simple A, B, and C decline, and it is looking very weak. There are reasons for believing that. Instead of going too much into detail, I'll just mention the conclusion is I'm not interested at all in any longs if this market is not breaking the highs 72,634. Right, because of the signs of weakness we are observing here, no longs unless we see a breakout here, right? Instead, we are definitely interested in selling shorts if we see a break below 60,000. I think it is 60, yes, somewhere 60,000. You can check the low exactly because every data provider will have its own different levels. This one is Bitstamp here, so it will be a little different from the data provider you use. So long story short is bearish possibilities have activated. I have the bearish count, which I would like to discuss here. If we consider this point of reference, which is the starting point of our analysis, then we can consider this as a wave 1 down, as a wave 2 up. And instead of counting this as an A, B, and C, this can also be looked as a wave 1 of a lower degree. And this pullback can then be a wave 2 of a lower degree, which can then see further fall and a stronger one because this will be the third of the third. That's what we mean by the third of the third. Right. So considering this possibility is the reason why I am so cautious and not interested in any clear longs or sorry, any longs at the current levels. So stay cautious on BTC. It has opened up to a strong bearish possibilities. Of course, longs if they present themselves only above this level. That's analysis for now. If the market does something very clear enough that requires an updation from my end, then of course I'll push that in the Slack and in the next webinar. I mean 112th edition. So that was all for the discussion, guys. Thank you for sticking till the end, those of you who did. And lastly, again, if you are liking the content, do not forget to hit the like button. And much more importantly, we are still not getting the traction we want from these webinars. It does take a lot of hours of analysis to come up with this stuff. And I don't think people discuss these kind of stuff for free anyways. So kindly show some love from your end and share it with 4 or 5 of your contacts who are into trading or your social media or groups on Slack, Discord, WhatsApp, Telegram, whatever you are using, right? Kindly do your part, and I highly appreciate your efforts. Thank you for staying till the end, guys, and I'll see you in the next one. Bye.